Are you tired of the same old investment advice? Stick around, because today we're diving into some underrated ways to invest that you probably haven't considered. Let's get started. Look, I know what you're thinking. Savings accounts? That's boring. But hold on, because with interest rates on the rise, high-yield savings accounts are making a serious comeback. I'm talking about earning significantly more interest compared to your traditional savings accounts. Think of it like this. Your money is working for you, generating passive income while it's just sitting there. Plus, it's liquid, so you can access your funds whenever you need them. So don't underestimate the power of a high-yield savings account. It's a solid foundation for any financial portfolio. All right, let's step it up a notch. If you're looking for a safe investment with a guaranteed return, long-term certificates of deposit or CDs might be right up your alley. With a CD, you're committing your money for a fixed period, typically ranging from a few months to several years. In exchange for that commitment, you lock in a higher interest rate than you'd get with a regular savings account. The longer you commit, the higher the interest rate. You get to choose a term that aligns with your financial goals. Just remember, you generally can't touch your money until the CD matures without incurring a penalty. Now, let's step into the world of corporate bonds. These are essentially loans that you give to companies, and in return, they promise to pay you back with interest. Corporate bonds do come with some risk, as a company's financial health can fluctuate, but that's where diversification comes in. Spread your investments across different companies and industries to mitigate risk. If you're comfortable with a bit of risk and are looking for potentially higher returns, corporate bonds might be worth considering. Now, let's talk about a classic investment strategy: dividend stocks. When you invest in dividend stocks, you're buying shares of companies that are known for sharing their profits with investors. It's a way to generate passive income and potentially benefit from long-term growth. Look for established companies with a solid track record of dividend payments and a history of increasing those payments over time. Or you may invest in a fund that invests in dividend stocks. Remember, investing in dividend stocks is a long-term game. Let's dive into the world of value investing, where we hunt for those hidden gems in the stock market. Essentially, you're looking for companies that are undervalued by the market. These are companies with strong fundamentals, a solid track record, but for whatever reason, the market has overlooked them. The key is to identify these companies, do your due diligence, and invest when the price is right. Value investing takes patience and discipline. It's about finding those diamonds in the rough and holding on to them for the long term. Or you may invest in a fund that invests in value stocks. Now, if you're feeling adventurous, let's talk about small cap stocks. These are companies with smaller market capitalizations, typically under $2 billion. Think of them as the startups of the stock market. They may be small, but they have the potential for explosive growth. These companies are often nimble, innovative, and disruptive. However, investing in small cap stocks is not for the faint of heart. It can be volatile, and it requires a higher risk tolerance. But if you're willing to ride the waves, the potential rewards can be substantial. Remember, diversification is key. Don't put all your eggs in one small cap basket. And you can also invest in a fund that invests in small cap stocks. Spread your investments across different companies and industries to mitigate risk. Let's talk real estate, but with a twist. REIT index funds offer a way to invest in a diversified portfolio of real estate properties without the headaches of being a landlord. You're pooling your money with other investors to buy shares of companies that own and operate income-producing real estate. REITs generate income through rent payments, and they're required to distribute a significant portion of those profits to shareholders in the form of dividends. Investing in REIT index funds provides diversification within the real estate sector. Let's talk about the granddaddy of index funds, the S&P 500. This index tracks the performance of 500 of the largest publicly traded companies in the United States. When you invest in an S&P 500 index fund, you're essentially buying a tiny piece of those 500 companies. The S&P 500 is known for its long-term growth potential. Over the past 90 years, it has delivered an average annual return of around 10%. If you're bullish on the future of technology, then investing in a NASDAQ 100 index fund might be right up your alley. This index tracks the performance of 100 of the largest non-financial companies listed on the NASDAQ stock market, with a heavy emphasis on the technology sector. Think Apple, Amazon, Microsoft, and Google. These are just a few of the heavy hitters that make up the NASDAQ 100. Investing in a NASDAQ 100 index fund gives you exposure to this exciting and dynamic sector. Just remember, the tech sector can be volatile, so it's important to have a long-term investment horizon. Let's talk about the world of rental properties, a time-tested strategy for building wealth. Owning rental properties can provide you with a steady stream of passive income, potential appreciation in property value, and even tax advantages. Imagine this. You have tenants paying down your mortgage while you enjoy the benefits of being a property owner. Now, being a landlord does come with its own set of responsibilities. But for many, the rewards outweigh the challenges. Plus, with property management companies, you can outsource some of those responsibilities. Just remember, real estate is a cyclical market, so it's important to do your research and choose your properties wisely. Let's talk about a lesser-known investment option that can provide tax advantages and support your local community: municipal bonds. These are debt securities issued by state and local governments to fund public projects, such as schools, hospitals, and roads. The interest income you earn is often exempt from federal income tax, and in some cases, state and local taxes as well. Investing in municipal bonds is like lending money to your local government, knowing that your investment is helping to build a better community. Plus, municipal bonds are generally considered to be relatively safe investments. Let's talk about the gold standard of safe investments: Treasury notes, bonds, and bills. These are debt securities issued by the U.S. Treasury Department, backed by the full faith and credit of the government. When you invest in Treasury securities, you're essentially lending money to the government. Treasury securities are considered to be extremely safe investments. They're backed by the government's ability to tax and print money, making them highly unlikely to default. Treasury notes, bonds, and bills offer varying maturities and interest rates, giving you flexibility to align your investments with your financial goals. Let's talk about a type of investment that offers both liquidity and low-risk money market funds. These are mutual funds that invest in short-term debt securities, such as treasury bills, certificates of deposit, and commercial paper. They typically offer higher interest rates than regular savings accounts, while still providing easy access to your funds. Money market funds are a great option for investors who want to earn a decent return on their cash while keeping their money readily available. They're ideal for emergency funds, short-term savings goals, or as a temporary holding place for cash that you're not ready to invest elsewhere. In today's digital age, there's an app for everything, including investing. Robo-advisors are online platforms that use algorithms to create and manage investment portfolios based on your financial goals, risk tolerance, and time horizon. Think of them as your personal financial advisor, but without the hefty fees. Robo-advisors take the guesswork out of investing by automating the investment process. They're a great option for beginner investors who are just starting out, as they provide a simple and affordable way to invest. Thank you for being willing to listen and watch. I hope that this video has opened your eyes to some of the more underrated investment opportunities out there. Do remember to seek professional advice. Please like, comment, and share this video. And don't forget to subscribe to this channel and follow Leroy Brown at leroyabrown.ca to discover more.